Okay, officially, welcome out everyone to the Market Watch Group weekly opening bell. We met yesterday, talked about the market. Um, we got an improvement as expected. Pretty good score, pretty solid score. Yeah, okay. So this week, what do we have? We have Fed. The Fed that we've been building to all year long. And so now all of a sudden it's getting a little bit like, oh, what are the expectations? Um, yeah, you just saw. We'll go back to it. We'll go back to it because you didn't actually see it. Sorry, you didn't see it. But we'll go back to it and take a look. Let's get through the housekeeping matters to start things off. Remember, we're not brokers, not advisors. Don't give advice, don't give recommendations. This is for education, illustrative purposes only. Today, we're going to look at the futures and the news. Futures are interesting. The S&P is up. NASDAQ is down. Review the economic calendar and posture. Posture, up a half a point. We'll go through the breakdown. Economic calendar equals FOMC, right? Fed interest rate decision. This will be our first cut in a long time, actually. When I'm going to ask ChatGPT real quick, was the last Fed cut? Anyone want to guess? Oh, yeah, I remember now. They had raised a couple of times back in 2019, and then on March 15th they cut for COVID. That's what it was. I remember that. They cut it because of the pandemic, and they left it there until March of 2022. At which time they started to raise. That's where we are now. Okay. Mindset for open trades. Yeah. Bullish. I'm bullish. That's my mindset. I am hopeful that what we've seen, particularly in regard to institutions, is relative of what the institutions see as their path with what the Fed is doing. So again, this is a big week for us. We'll go through the opening range. We'll look at the watch list. We'll talk about the trading plan. That's what we've got going on. So let's pop back into this conversation here. We have gone from 70% of people thought quarter point, 20% thought the half. Now, 1 week later, it's shifted. 63-37. Almost completely the opposite. So then you have to ask yourself, what information did we get in the last week that would justify this type of realignment? Anybody want to throw a guess out? And I'm not asking because I know and I'm waiting to see if you know. Right? I'm asking because I don't think that anything came out that warranted this. Therefore, what is it? It's more market overreaction. If there wasn't something that fundamentally shifted from 1 week ago to now, then what is it? It's the closer we get, the more excited people seem to be getting. That's it. This is not some kind of technical thing that is like, oh, because of this, now we think this. I looked around. I didn't see anything in the last week where we're like, oh, man, because of that, the Fed is more likely to now cut a half. There was none of that. Everything came back just basically as it's been coming back. Anyone disagree? Again, like I said, if there is something, I didn't see anything that I felt could explain satisfactorily this shift in sentiment. This is just simply people like, maybe we'll get a half. I think we might get a half. And it's like, it's not actually that beneficial. So Empire State Manufacturing came out, exceeded forecast by a lot. Expansion. Okay, so even that's positive. I'm not a fan of that report, generically speaking, because it's so volatile, right? Like, that report can be all over the place, but it was a positive surprise, if anything, right? Like, if it was a negative surprise, I'd probably be like, yeah, but that report. Yeah, I'm telling you, man. Like, there's things that we could look at, and then we'd be like, that's not really connecting the dots necessarily. So, okay. It is interesting, though, right? I would say. What do we have going on? Let me make sure this is fully. Rate cut is the start of a new Fed era. What comes next? The question now is, how much deeper and faster will the Fed go? It's, everyone just sort of assumes and expects that, a certain rate, but they're going to hit it, watch sometimes. I don't know. We'll see. U.S. futures tread water and count down to rate fall. Fed looms, critical market. Investors see a Harris win is better for bonds, worse for stocks. I don't think that's necessarily true. Like, now all of a sudden they're trying to attach polls to market, and that just, I would, if I were you, I would ignore anything that looks like that as an article, because it's just nonsense. It's like a hindsight correlation. It's meaningless. Let's see. David Grease. Yes. Fed's decision will rock markets this week. I mean, it could, I guess, it could. First cut in 4 years. 4.5 years, but I was counting. All right. Is there anything else that we need to be aware of besides the Fed? There's the Empire State. They are expecting negative. Miguel said it looks like it came back ahead of expectations. Tomorrow, retail sales, production capacity utilization. Those are really steady numbers. They really don't fluctuate too far. You can see what they expect tends to be right on spot. We don't see those impact the market. I would honestly, there's nothing else. Housing starts, building permits. Nobody cares about real estate right now. Jobless claims, 230. That's what we've been getting. Nobody cares. Fed manufacturing is expected to tick up as well. Existing home sales, leading indicators, nothing Friday. Okay. Oh, look. My page unresponsive is back and my finish update is back. I don't know. Google Chrome is starting to let me down to some extent. Okay. Well, we are 2 minutes from open. Let's get the futures up and then we'll start going through our posture. Talk about what we saw, what we think, what today brings us. Michael's not getting voice. Oh, Michael, I'm so sorry. I'm not sure why the voice. Is everyone else getting voice okay? Yeah. Okay. Good. Okay. What am I missing? What am I missing? It says that the futures are down 0.04 and this candle looks to me like it's jumped up. I'm trying to connect the dots on that. Was that just a wrong looking chart? Someone pull up the futures on your end and tell me if it looks like there's something wrong with it. If it looks, yeah. This is the close and this is the open, and that looks like it's higher. And this says it's flat. It's zero. So I'm not sure what's going on the ES chart. If someone has ES charts, that's the E mini S&P 500. If you have that on your side, look and see. That just doesn't make sense to me. I'm trying to figure out why that is, but it's all right. We're just going to go into the SPY. Market's open now. That looks flat. Yeah, that's 0.02, and you can see how those are right next to each other. That's flat. The other one was up, and I don't understand what that was. Oh, goodness. All right. Okay. So we talked about market posture. Well, we're talking. It does look up. Thank you, Miguel. I just want to make sure that I'm not crazy. I mean, I am crazy, but not in that regard crazy. What do we think? Long-term trends stay the same. If you remember last week, we left it alone, even though it technically dropped a little below the trend we had been measuring. And we said we were doing that in case it popped back in, and it did. So it was great. We left it alone. Short-term trend. Up a point. Excuse me, up a tick. A tick being a quarter of a point, right? What happened? We dropped, we got it back, gave it back. Boom. 3 out of 5 there. Volume increased. Great. There was even talks of, hey, would you think that this is even possibly more? No one really thought that, but it was thrown out. I threw it out, but I'm just saying it was worth a discussion. Major markets stayed the same. Sector rotation stayed the same. It's a bit funky in those. Sometimes those can be so helpful. Sometimes not. We're in the not. And VIX, I actually thought the VIX might, but it didn't. So that stayed the same. Overall, though, moved back to the 5. So that's the second time in 2 weeks that we are looking at a 5 score. Yeah, that's great. That's quite bullish. It's back in August last year, just as a reminder, we were very bullish. You can see June, July, we're good. It keeps going. July, it starts to weaken, and then bam, into August, it dropped. Okay, and then it recovered. Just like we saw a little bit now. But it only recovered for 3 weeks. It went from a 175 to a 35 to a 425, and then it stalled, and then it started coming back down, and then we just sort of stayed kind of. Then from there, all of October, 125, 175, 125, dropped to a negative. And then we started to recover. So one of the things we've asked is, do we think that there's a chance it's going to look like that? But I'm going to say no, because look, from where we bottomed at 2, we're now on week 5 of increased strength. Remember last time, I did it again. Last time, it strengthened for 3 weeks and then it dropped. This time we've got 1, 2, 3, 4, 5 weeks of strength. It's holding on. It looks different. It looks different. Michael Smith said the ES gapped up. It did gap up, but it gapped on 5 o'clock last night and it's just been sitting there. It's a weird one for me. Just a little weird. So we ended up at 5. I feel good about that 5. I mean, there was nothing too concerning. I mean, obviously, with this report, anything could happen. We recognize that. But I'm just saying, it looks fine. Okay, so that is our market posture. Bullish. Let's see how things are starting off today. Let's get some charts up here. Okay, so the opening range, sellers are coming in, saying hello. So we talk about market posture. Market posture is bullish. Now what? Let's talk about let's draw that line a little straighter. And I'm going to come across like this. It kinked up a little bit. You get the gist. We're kind of pushing up against that old resistance. So, what are we thinking? Well, I think there's been some decent momentum already, but I think there's plenty. Yeah, I'm going to watch and see. Even if it fluctuates for a day or two around here, I'm still going to see if it can look. We can see it did that here, then it didn't. Great, that's fine. If it does it, I'm gonna probably see, but yeah, let's see if it can pop through there. That's what we're looking for. Let's see what's happening in technology. Apple today. Oh, Apple. Apple has now gone consolidative. I was thinking about it still. Less so with these 2 days as it kind of failed to get going off of this turn. But at this point, makes it easy, right? At this point, it makes it easy. Now in this consolidation, so it has to go like this before I would trade it now. I'm not going to look and be like, when this thing hits a bottom, I'm going to try to catch it. I'm not. I'm not interested in that now. But interesting, right? That's a lot of where that weakness is coming from. What's the news? Aflac is viable. We said that on Sunday. It's still viable now, and it would be a continuation trade at this point. I would be comfortable there. I would put my stop maybe just below the red body just to give it a little bit of space. I think I could get in for just a little over $2 of risk on this. Last time it made a move like this from the second day, it went from 99.5 to 111. That's 11 points. If I can risk a little over 2 to make 11 points, yes. I think that is something that we should be thinking about. Amazon, if you haven't taken yours, you might be thinking about that. Looks like it might not get there on this try. But Amazon is certainly going to be, if it pulls back from here, let's say it pulls back to here, well then now I think I'm going to get that move and maybe even a little bit more. So yeah, great. AXP. Seems to be bumping some resistance. I'm not going to get in late to these financials here. So far, I would say Aflac. I would say Bank of America. It's straddling the 50, but I think an argument can be made that there's definitely momentum in financials. So I need to make stars next to my watch list of the ones that are. I didn't even have Aflac on the list from yesterday. That's crazy. Aflac gets a star. Bank of America gets a star. BK, BLDR, overextended. We missed it. It's too late. Carrier, same thing. Caterpillar is still moving. I don't know. I don't feel like I like the thought of chasing the group. Even though this has a little bit still. Oh, the staples still look good. Yeah, Michael, when you hear this, I believe the lag is about 20 seconds when I timed it. 15. If you're ever on YouTube, there is a little lag. So if you're like, why didn't he answer my question? I probably didn't see it at first. But anyways, that's not a problem at all. It doesn't bother me in the least. I still want you to feel comfortable putting comments in 100%. CL, that's a put it on the list for this week. Put a star next to it. It's setting up. It looks good. CMG. Sandy, did you ride this? You still in it? He just replied something like that. 15, 20 seconds. Still in it. Love it. Well done. Costco. Kind of stalling out. We'll see. Diamonds. No. Fastenal. When's profit taking? Miguel? Is it at profit now? Did you get to that point? He said now. He's right now, he said. I love it. It's awesome. Bitcoin. Man, Bitcoin doesn't look like it's doing much. Bitcoin's a funny thing. Has anyone been a Bitcoin trader? I mean, it's gonna survive. It's viable but it's just like nobody knows what it's gonna be. Is it gonna be a facilitator? Is it gonna be an investment? Is it gonna be like what's it gonna be? How's it gonna function? It's gotta have some utilitarian purpose. You can't just keep having all these like tech bros coming out with like we're launching a new coin. You're like, what does your coin do? You're like, nothing. It doesn't do anything. It just coins around. I don't know. Right? I mean, there's times where I'm like, am I just too old and I don't get it? Because to me, right now, there's just a feel of Beanie Baby to it, right? Like, oh, I mean, like the whole NFTs, they're like, oh, you can buy a cartoon chimpanzee NFT for $1,000. I'm like, why? Like, it's a cartoon. Like, I could make that with ChatGPT with one sentence of description. Like, what do you mean? Of course, those have all collapsed, right? They've all collapsed. The NFTs, like maybe if there's a piece of original art backing it, like if there's a piece of art and then you can have like the digital representation, okay, that's meaningful, right? So I think there's viability to it. I mean, it is a great mechanism for a number of different things. I don't know, but it's certainly not that appealing right now. There you go. Yeah, the blockchain technology, it's interesting. I mean, it's very, very, it used to be more so, very energy intensive because there's so many computers, like all this whole network of everyone verifying things and annotating that and whatnot. But it's gotten better. I don't know. Digital. Gold staying high, still pushing as we are on the precipice of the Fed making an adjustment. General Motors was just a little too much there. I don't know. If you thought about something like this, you would go here, right? In General Motors, okay. If you're in it, then you're thinking, should I have my stop here? And then should I move it here for tomorrow? And so on and so on and so on. So AI is heavier energy. Is it? Is that right? Just in I'm curious now that you mentioned that, how they decide like what a unit of usage is, you know, like relative to the last I looked, there's like 8,000 coins now. Like, it's like, what, why? It's not like a stock. A stock is a company. You own something. A coin is just a digital footprint, I guess you would call it, right? Like you don't actually own. So it's interesting to me. Google. We should explore further as a group. We are going to. Google, see, it's for me still down. It's got to break higher than this. If you notice right now, it is just sitting underneath this line of consolidation. God, I'm so bad at drawing lines today. It's got to get through it. Anything less than that's a no. Now, can it do a sneaky reversal? You're like, Scott, what's a sneaky reversal? That sounds fun. It is fun. Very fun. What does it look like? It comes back and then just sort of like, bing, bing, gives you the higher low without having broken the initial consolidation. That's a sneaky reversal. If it never breaks this first, but still gives you a little higher low, and you're like, you know what? I might go ahead and take it. Data centers. They're saying we will run out of energy to run AI before it can. So there's a lot of processing. Like, the funny thing is, it's like, AI has been around, right? All these, when you think about like the little bots that when you get ready to leave a website pop up and are like, are you sure? That's AI. It pops up and asks you a question. If you answer, it'll give you another, right? We've had basic versions of it. But now it's just amplifying, and now you're starting to see like way more use cases for it. And yeah, that's an interesting thing, right? You think you need energy to run AI, you need energy to run Bitcoin, you need energy to run electric cars. Like, what are we doing to our energy consumption needs? And then what are we doing to fill that need? That's a broader problem, but 73, right? There you go. Goldman. It's not enough yet for me. Home Depot overextended. Yeah, I do like to see more, retail, consumer discretionary coming in. ICE pushing a little bit higher. If you like that, that's viable. I did a different one. IWM stalling a little bit. JP Morgan trying to figure it out. KKR a little bit of move. Coca-Cola. Oh, look, Coke. I like CL a little smoother, a little better, but this is turning. This is viable, actually. I would say viable trade. You probably have a good Heiken Ashi, too. Woo, looky. Looky. MasterCard overextended. McDonald's overextended. Meta pulling back with tech today. MMM has already started, but I like Coke and CL better anyways. Morgan Stanley. Yeah, maybe. Oh, look at Microsoft still, though. NDAQ. It's moving. It's the second day. It's moving. Is it moving phenomenally? Is it bumping its head against resistance like a lot of things are? Yes. All right. That's fine. Mm-hmm. Okay. What else? Why can't I advance my chart? Here we go. Netflix. Iffy. Nvidia. Ooh. Okay. We don't love that stochastics coming down like that in the overbought, but is it pausing? Is it rolling? If you're in it, you're going to be thinking about this one. I'm thinking about this one. BGR looks good, but I like Aflac better. PLTR still going. Still going. Come on, PLTR. Get on up. How hard do we need it? It's getting close. Here's the deal. When you get closer to this line, this trade gets more and more dangerous because it's like, that's it. You only have this much left to make. The question is, what are you risking to get there? Don't let it take away your nice trade. QQQ, iffy, RKT. Hey, Rocket Mortgages may actually recover if they can get the rates, right? RTX. Yeah, I think RTX actually still looks okay as well. SPY holding on. It's flat. I'm gonna go look at the futures for just a second to see what they say now. That chart's so weird. It just doesn't make any sense. Theoretically, this says that we closed at 56.26.75. No, that can't possibly be right. And now we're at 56.90. I don't know. I don't know. Tesla. Ooh, Tesla kind of failing to launch here. Failing to break this level. You can see this 232.5 resistance is pretty solid right there. TSM, like NVIDIA, rolling over. UNP, okay. All right, UNP. Come on. You can do it. You can do it. USB, still viable, but I feel like I'm more inclined to trade into insurance than this off-cycle bank. But I don't know, maybe. So where do we have signals? RTX is defensive and industrial, but it's the industrials. A lot of the industrials have already moved. So that one I'm a little leery of. What do I like mostly? I like Colgate and Coke. Those are defensive. They've been phenomenally strong. That's a great way when you've got a couple of things that you're starting to pare down. That's bringing some defense to the mix. So definitely I'm looking at those two. I like Aflac. Bank of America and USB I'm a little more iffy on. So we've got a couple of signals even today that are viable and I'm thinking about. I don't know. Give me your thoughts. Would you take... I saw someone say I'm not going to trade until after the Fed. No new risk, right? No new skin in the game till after the Fed. Are you willing to trade into the Fed? That's a question. I am. I'm going to. A lot? No. But I definitely want to have a few things on that if the market runs, I want to be in. We're a 5. We can't be like, well, I'm a 5, but I don't want to do this because of this event. There's always an event. Fill in the blank with whatever that event is. There's always something the market's like, well, we have this coming up. Yeah, okay, we do. So that's one thing I would have you be thinking about is willingness to hold positions. Let's keep finishing this list. UUP down still. The VIX. Okay, so a little bit of concern here. I will hedge. And I'm 100% willing to take a loss on the hedge. This is a low. If this turns, it hasn't yet. It's pinching. It's still sitting here. But if this convincingly turns, right, that's a higher low. I will trade a hedge. What will my hedge be? I'll go 5 weeks out in time, 5% out of the money, and I'll buy puts. I'll buy just a few contracts. What does that look like? So let's go take a quick peek. Let me bring this over. So the SPY is at 562.73 right now. That's it. 55, 5 and 5, Bob. You got it. A little slow down. Okay, 562.66 times 0.95. That's going to give me, what line is 5% out of the money? 535s. 534.52 rounds up to 535. That's my strike price. 5 weeks out in time. I got 32 or 39 days. Ooh, I'd probably go 39. Maybe I'd go 32. I don't know. It wouldn't happen until tomorrow. 31, yeah, I would go to the 39s. And now I would click here. And I would come here down to 535. Bing. Woo! That is not a cheap hedge. Oh, that has me a little reluctant. Holy shit. For reference. Now, that's a little bit expensive because we went out a little bit in time. I could go back here and say... That's a little better. Thank you, Bob. Bob just remembered. Now you know why the hedge is so important back when it's in the 12s and the 13s and 14s, right? $1.50 is even a little high. We got them as much as like 120 to 131 before, right? 120 to 130. But yes, 150, we're like, yeah. So this helps. And that's why I like to do a standard 5 weeks, 5% out, so that I can have like a reference that's like, hey, what does 5 weeks out in time and 5% out of the money look like for puts? Well, because the vol's at 17 right now, not 13. Just that much can make a difference, right? Yeah. So that's the concern. Hence the reason why it's so important that we're ready to hedge when VIX is low and stuff. But it is what it is, right? There's really, not much we can do about it. I'd probably end up with 1 or 2 contracts just to kind of like have something on. If you want to make it so we can look, this is my, what I tend to do. I don't love that it costs this much either. Like I'm a little bit like, do I want to go down to these? God, it's hard to get those prices down, isn't it? It really is. I mean, we're an extra 10 points out of the money. We're still barely below $10. How far do I got to go? That's what I'm used to. That's an extra 20 points out of the money, which is, like 3%. The problem with this spread, Clint, is that with this hedge, if the market goes wrong and drops, the volatility is going to spike. And so we actually want a Vega positive trade. So we want Vega positive, and the only way we can get Vega positive is buying a put. Or, actually, that's not true. Tomorrow night, in our foundations class, we are going to look at a calendar spread hedge. It will be in the advanced class because clearly, come on, right? Calendar spread as a hedge, that's definitely an advanced concept. But it has some advantages over buying a long put. Clint's thought process is on point. If we think it's too expensive, can we do something else? So, yeah, let's look at that. Someone make sure to remind me. But tomorrow night, we're going to look at a calendar spread as a hedge. Okay, lastly, before we wrap up, This week we are focusing on okay. What spread did you do? Was it a bear put spread? You can build bear put spreads to be Vega positive. Like you can. And so if you catch the direction right, okay. Yeah, let's look at that too actually then. Let's look at both. We've looked at the call. It's not cheap. So let's look at the spreads. Love the idea. Love it. Love it. Record keeping. Get your logs downloaded and worked on. That's what we're doing. Yeah? Download it. Trade. You need it. You're trading blind. You may not feel like you're trading blind, but I promise you will. So make sure that you get that record keeping in place. All right. Well, that's a good start for Monday, I think. Everything looks fine. Nothing too untoward happening right now. So, hey, tonight we have happy hour. No, what are we calling it? Cocktail hour? Happy time? Happy joy time. With a beverage of your choice. I'd love for some of you who haven't come to come hang out for a minute and just have a chat. Like we just shoot the shit. There is no max IV. It can go forever. But we'd love to get to know you on a less formal basis. So I'll be here. Steven's been quiet today. Steven, why are you so quiet? Are you feeling all right? Are you under the weather? Have you had coffee? Steven will be there. David will likely be there. We'll be just hanging out, talking, trading, talking, whatever else. So I'd love to have some of you come hang out for those. Otherwise, foundations tomorrow evening. If Bob can stay awake, well, I get it, man. If I was watching TV, I'd doze off for sure. All right, you guys, have a great rest of your day. Let's keep the conversation going. Pop in. Let's have some chats during the day in our trading discussions and market watch chat channels. Other than that, see you soon. Happy trading.